All right, welcome to the South County version of this podcast. We have Mark Lewkowitz from Colliers here who's going to help us out and tell us about South County. You got Chris Roth, the chapter president. Welcome to the podcast, Mark.
Thanks, Chris. This is great, buddy. Glad to be here.
Hey, we all know you from a business standpoint, and we just wanted to be able to. I've asked everybody a little bit of a personal question. Let's try to get to know you a little bit outside of business. So tell us, are you from here? If not, how'd you get here? Did you play sports? Just tell us how you got to San Diego and how you got into business.
Yeah, originally from Northern California, just north of San Francisco, Marin County, and I came to San Diego in 2007. I graduated and I ended up playing basketball at UC San Diego then, and then traveled Europe for a little while, backpacked through a few hostels, jumped into commercial real estate thereafter. Fast forward, now I got a 4-year-old, 2-year-old, and 6-month-old, so not getting a ton of sleep, but working hard.
Nice, man. All right, well, let's get into the market. So I'm going to ask you a few Otay specific questions. Otay has had a lot of new development in recent years, and there's a lot to be delivered. Why don't you, can you let us know how much is scheduled to be delivered in the next 12 to 24 months and how much has been delivered in recent years?
A ton of new development, and it's the only area in San Diego County where you can basically put up spec concrete tilt-up buildings. So by the second quarter of 24, we're going to have 2.3 million square feet that's coming online. The most that the county has ever seen at one time, and definitely the most for Otay Mesa.
And how much, has there been a lot delivered in the last 12 months? Can you give me any kind of indication on that?
I believe in the last 12 months, there's been about 800,000 square feet that's been delivered. A lot of that has been leased prior to C of O, which has just been amazing. And that's given a lot of the institutional developers, kind of drooling at the mouth opportunities to develop here down by the border.
So the market's changed in the last 12 months with interest rates, and you hear talks of recession and all this. And so you're saying we're going to have the most real estate ever delivered to San Diego County. How's everybody feeling? Are we still feeling like that's going to get absorbed? And if so, why?
Yeah, well, I mentioned that number of 2.3 million square feet by the second quarter of 24. That's a ton of new product. So Otay Mesa last year outpaced the entire county in net absorption, had over 1 million square feet of net absorption. I think the whole county wide, it was a few 100,000. What's different now is that you have just Mexico-related tenants now taking space. The last year, you had some groups from central San Diego that could not find functional dock-high distribution space that were then pushed to Otay Mesa. Those groups may not be trickling, may not be in as far as we thought. So now it's just border-related Mexico tenants. With 2.3 million square feet, there's going to be a lot of opportunities at 100,000 square foot range. That seems to be the division by a lot of these institutional spec developers, these 100,000 square foot bays. So it's a ton of space, but I think that what's happening on the south side of the border, there's a very good chance that it could be absorbed.
Who are the main developers that are? With 2.3 million, there's probably a lot, but you want to call out a few developers that are down there that are active right now?
Majestic is very active, very large developer nationwide. We're seeing Phelan Development put up some buildings, and then obviously, Lincoln just did a big project down there. And then we're seeing a lot of groups that are looking for land and trying to go vertical.
We're hearing nearshoring, that term a lot. Why is that happening? How you mentioned a lot of tenants coming from Mexico. Just generally, can you speak to that and just let us know how that's affecting your market and why it's happening?
Yeah. So in summary, before COVID, you had a lot of these U.S. companies with manufacturing operations over in China. COVID hit, and these U.S. companies that were manufacturing in China could not get their products over the Pacific fast enough. It takes 21 days to move a product from a manufacturing plant in China over to the U.S. side. Now, COVID hits, these U.S. companies can't get their products. So then they think, okay, how do we manufacture at a relatively low-cost basis and get our products to the U.S. consumers? So then that's where Mexico has this huge catcher's mitt, as they have a very young labor force, very cheap cost of goods, cheap raw materials, and it takes 1 day from the product after it's made in Mexico to get pushed up to the border to the U.S. side. So why I'm bullish on Otay Mesa, I'd call myself a long bull, if that's a term, is that in Tijuana, you are as close as you can get to the fourth largest economy in the world, which is California. Tijuana is absolutely booming right now. You got 75 million square feet, 0.2% vacancy rate. There's an insatiable demand that's coming up from the south side of the border. A lot of medical device, a lot of technology companies down there. So I foresee, with all this new spec development, they're going to ride the coattails of this product, of mainly 3PL and distribution and custom brokers that need to move the product from the plant in Mexico, drop it in an Otay Mesa warehouse, and then distribute it north.
0.2% on 75 million square feet. I did not know that stat. That's crazy.
It's wild enough where then it forces Prologis to start building some spec buildings in Rosarito.
All right, let's move to the investment market. Look, activity changed 12 months ago. I know our team, I've told everyone else I've interviewed, we lost a lot of deals due to capital backing out. A lot of, hey, we're going to be quote unquote selective. And end of last year, beginning of this year was really slow. Are you seeing a change? Did you hear the same things? And are you seeing a change when it comes to the investment market?
Yeah, I think we'd all, be living under rocks if we didn't see what you just mentioned. I think that, we're starting to see some deals trickle in at still some very good cap rates and good basis. But those deals were tied up 6, 8, 9 months ago. So moving forward of deals that will close probably from today on, I think there's definitely an adjustment. There has to be when the cost of capital has increased as it has. So moving forward, as far as on a cap rate basis, I think you got to be 6 to 6.5 on a single tenant basis, and then I think on you are seeing some deals where some groups like LaSalle, for example. They bought a deal at 2020 Piper Ranch. They paid a 4.1% cap rate for it, but the price per pound was in the low 200s. That was the second largest building in Otay Mesa, in the county, that was built after Amazon.
I guess all good answers. As far as do you see buyers coming back? Because it seemed like at the end of the year, they're just, like I said, selective, which meant to me, we're not looking for anything, but if you have a smoking deal, give me a call. Are you seeing them be more open, more active? I guess would be the question.
It really depends on the profile of the deal. I think buyers can be a lot more picky now. Empire Center is a deal in Otay Mesa that just traded. I was told it got 17 offers on it, ended up trading to a private family. So where the institutional buyers that would come in and have to hit a certain basis and certain return, where they may not be able to reach and stretch in over their skis, then you have a smaller one-off family. In this case, it was a family, private family from Hawaii. And this Empire Center deal was pretty interesting. Being close to it and, talking to people closely involved with it, and I didn't sell it. I wish I did. They basically said that the guidance was somewhere in the kind of low 200s to mid 200s. And the pricing ran with those 17 offers to, I think, closer around 275 a square foot. This private family in Hawaii picked this thing up and decided to, get in and pay for it and hold it.
Well, that's encouraging, man. Rare in this market where you undervalue the thing. What would you say, let's call it 12 to 18 months ago, prices were what they were? Would you say that prices are, as a percentage drop, how would you say that changed?
I would say we're about 10 to 15% today.
Okay. Perfect, man. All right. Last question in the investment field. What do you see? How do you see this playing out over the next 12 months? Do you see cap rates changing? I know this is, no one knows, but if you're just going to take a guess, cap rates changing, per square foot dropping, what do you see?
I think the cap rates have to change. I think they're going to tick up a little bit, and I think the price per pound is also going to drop. Another 10 to 15%, hard to say. We'll see what the Fed does in the coming months here in raising their interest rates.
Okay, sounds good. Let's move to the user market. We know that pricing changed for investors. We know activity was off. What are you seeing? Let's do the same question. How has pricing changed, and maybe as a percentage, if at all, for the user market?
There's still not a lot of user buildings out there, which is strange. The cost of capital and the interest rates ran on them, but not having a lot of buildings to choose from forces them to pay, the higher prices. So with only one real developer that's building owner-user buildings and not a lot of product available, I do see the owner-user buildings kind of staying flat. I think that having a leased building, a leased investment, someone maybe trying to push, is less valuable than an owner-user building today.
How is the demand for these things? You talked about Mexico having such a low vacancy and the demand for nearshoring. Are you seeing that activity for buyers still rampant like it was maybe 2021?
Yeah, it's been good, but with interest rates as high as they are, it's forced some of these sellers to kind of get creative and say, okay, let's do a lease with option to purchase. Let's give you the first 12 to 18 months to lease this and figure out your buy. If not, you're going to be a tenant paying a strong lease rate.
Let's do the same question 12 months from now. Prices drop, activity the same. Do you see, with this quote, this recession they talk about, do you see properties coming to the market?
I don't anticipate prices dropping much more than they are now, maybe 10%. But I just think that there's this engine on the other side of the border that is incredibly strong for Otay Mesa. It has to push product up here. It's only good news, I think, eventually in the next 6 to 12 months. I think that if the Fed would just rip the Band-Aid off, increase interest rates one more time, and then we all can kind of catch up and move on.
Let's move to the leasing market. I'm not going to ask the question how activity is because I think what you basically answered that question. How are lease rates doing right now? Are we let's just say, not for the new buildings, but just your standard industrial building in Otay, let's call it 40,000 square feet, nothing fancy, but just middle of the road, or give us a range on what that goes for.
So lease rates, 40,000 square feet, you're looking at about $120 to $130 a square foot from that. Now, if you're a 100,000 square foot tenant, you're going to have about 6 to 7 options coming available here in the second quarter, first to second quarter. So if I'm building 100,000 square feet, there is going to be, other people to dance to choose from. So I see those rental rates softening just a hair. On the small stuff, though, we're talking 20 to 40,000 square feet. There's very, very few options out there. And the reason being is that for some of these spec developers, the cost to build a 20 to 40,000 square foot space is just that much more expensive. Demising walls, restrooms, offices. So a lot of these spec developers like to come into Otay Mesa and do what has been successful in Inland Empire, Dallas, Atlanta. Max out coverage, big box building, and lease it before C of O. Historically, Otay has always been a little bit of a smaller market. So as a developer that's building smaller units, I think that they'll be able to retain those projected lease rates and what they underwrote. Whereas the bigger stuff, I do see softening just a hair.
I think I skipped this question on the user market, so I'm going to come back a minute. Since we're talking about pricing, what's a user building worth today? Same question, 40,000 square feet, or just give me a range of maybe some of the new stuff coming out that the expectations are for those developers and what they're trying to get.
Definitely a difference in expectation of what the developers want versus where we'll trade. I think that originally, about 4 or 5 months ago, some of these spec developers wanted about $350 a square foot. Realistically, it's hard to make some of that pencil for some of these owner users. I think that we will see some trades in the 300s a square foot, which will still set records for Otay Mesa, and that's on the owner user side.
All right, let's move to development. We kind of already touched on it a little bit, but like let's a lot of land is traded in Otay for all these developments. Can you give us a general question, because it all depends on the location, the dirt, a lot of what's going on, right? But just give me a general understanding of what values are for dirt.
So some of those comps that we talked about that were tied up 12 months ago are just starting to close, whether they're getting through some of their enviro, mitigation, whatever it may be. There was a trade last week at $42 a square foot for a finished lot, which is huge. Today, moving forward, I think finished land is somewhere in the low 30s, low to mid 30s a square foot. And then the raw land, it'd probably have to be in the mid 20s. To go from raw to finished, it takes about $10 a square foot. You have to buy mitigation land, and you have to go through the process to finish it, curb, gutters, utilities. That costs about $10. So I'd say $25 a square foot for raw land, 30 to 35 a square foot for finished, depending on the location.
How about to build a building? Just the cost to develop it. I know there's obviously a lot of variables in what you're going to put on the land, but let's just give us a general understanding of what that costs.
$250 to $275 a square foot.
Is that how you talk about the cost of construction changing a lot and how it's so expensive? Do you see that changing consistently, or?
Yeah. Talking to some of these general contractors and developers, I have heard that some of the construction costs are getting a little bit cheaper, and it is lightening a hair. But I hear different things every other week. But I know that based on some of the spec buildings that we're talking about with different developers on some built to suit, you're looking at about $250 to $275 per square foot.
All right, bud. Well, let's just end it with a prediction. Something we haven't talked about already. Give me something in the next 12 months that's going to happen.
That I'll get less and less sleep. Right now, my kids are not sleeping. It is no bueno. No, I think that what's going to happen now is you'll start to see a market called Calexico gain some traction. I think that as Tijuana has that 75 million hilly 0.2% vacancy rate industrial market, Prologis looking in Rosarito, I see Mexicali being the next kind of strong market for Mexico. It's flat. It's got utilities. It's got prestigious universities. So I see Mexicali having a lot of new nearshoring taken on there. With that, that'll boost Calexico. It's hotter than heck in Mexicali, but again, if you want to be as close as you can to California and you want to manufacture right on the border, I think the Mexicali is the next place.
Well, hey, man, really appreciate you coming in. That was awesome, Mark. Hey, we'll catch you on the next one. Thanks, guys.